Well, one investing term that seems to be cropping up more often is ESG. Now, that stands for environment, social and governance. And it's one way to determine if a company you want to invest in matches your investment philosophy. Well, CGTN's Terrett talked about that recently with Nili Gilbert, co-founder of Matarin Capital Management. He began by asking her for her definition of ethical investing.
Well, when we think about ethical investing specifically, we've observed that that is often really specific to the client. Different institutions have different values, different people have different values. And so when you think of ethical investing, you may think of a concept called negative screening, where some investors just don't want to hold certain types of companies in their portfolios. Could be tobacco companies, fossil fuel companies. What we actually do when we can is allow our customers to tell us what ethical means to them and screen that out.
So every person has a different idea of what is an ethical stock. What about when you're dealing en masse with a group of companies? At that point, surely, on behalf of the multiple investors involved in that fund, you have to make the decision.
That's right. So if we're managing a commingled fund, then we have to make the decision on behalf of the customers. For us, what we've done, for example, we've launched a new global long-term investment index with S&P. And so in order to decide which types of negative screens would be appropriate in that portfolio, we just thought about what does long-termism mean and what types of businesses are least likely to be helpful to a successful shared long-term future. So that meant, for example, screening out fossil fuel stocks.
Right. So break it down one by one. You look obviously at whether a company is financially successful or not. And obviously the key thing is to make money at the end of the day for your clients.
Yes.
But what exactly do you look at after that?
So you're right. We are financial first investors. We are hired to make money for our clients. And in order to do that, essentially to beat the markets, we have to find issues that we think may be mispriced on average by other investors. And when it comes to environmental issues, social issues, and governance issues, many investors just have trouble figuring out how to integrate that information into their portfolios. So we think that there are some ripe areas to be able to add to returns by focusing on what we call ESG, for environmental, social, governance integration.
And this is a new tool, isn't it? Relatively new tool.
The tools are relatively new because the data is relatively new. When you actually, responsible investing goes all the way back in this country in the Quakers to the 1700s. But if you want to be able to use these tools to evaluate whole portfolios of stocks, you need pretty robust data sets. And you need some historical data as well to see how things have evolved over time. And those types of data sets are newer, started coming around in the 00s and have become much more sophisticated today.
We thought it might be rather fun to ask you, as an ethical investor, whether you've ever changed your mind about a company or a group of companies, whether you've ever thought that they might not be appropriate for your customers and then changed your mind because you've looked deeper into the data.
Well, it's funny that you should ask that. There's one principle that we are putting forward strongly in our work right now, which is that it's actually not always the best thing to do to focus on just investing in the companies that are perfect from an environmental, social, or governance standpoint right now, but actually to be willing to invest in the companies that are showing positive long-term trends. May not be perfect yet, but that you say, you know what, this company is one where I think that they will change my mind. Okay. And if that's the case, then if you're a long-term investor, why not get involved as an investor now so that you can be part of the net benefits that will accrue as the company improves and starts to change other investors' minds, which will help you to earn an attractive return from being early and providing that long-term capital.
That's the key to beating the market, as you were saying just now.
Exactly.
Finally, thematic investing. I know you're very keen on this. Thematic investing, what is it? And again, it's a long-term investment strategy, isn't it?
Well, thematic investing means, as opposed to starting by looking at one individual company and doing the analysis that you might do on its responsible investment profile, to start with a broad theme or question about your vision for the world, and then back into the types of positions that you would want to hold. So some examples are gender lens investing, fossil-free investing, which is evolving into low-carbon investing. An even bigger picture question about climate change is low carbon. And you're right, one theme that we're really passionate about at Matarin is the theme of long-termism and the intersection of long-termism with sustainability. And because if you're a long-term investor, then even if you're not an environmentalist or a social activist, you know you're going to be invested in a company for years, then at some point you kind of have to start asking, how is this company preparing for climate change, or for the way that social pressures are affecting real outcomes in companies' businesses. So for us, long-termism is an investable theme, and we're focused on earning a patience premium for being long-term investors who are also integrating a focus on companies making progress towards sustainability.